So good morning, everybody. Thank you for joining us this morning for LaingBuisson's first webinar meeting for 2021. It's been a pleasure for CMS to partner with LaingBuisson. I'm Candice Blackwood, Healthcare and Life Science Real Estate Partner at law firm CMS. And we're delighted to be joining with LaingBuisson on the launch of their Care Homes for Older People report. The format for this morning is William will present his overview for 10 to 15 minutes of the report, which will be available for purchase from today. Then we'll move on to this morning's panel, and we're delighted to have James Tugendhat from HC1, Andrea Auteri from Elevation Advisors, and Vic Rayner from the National Care Forum. And they will be joined by William, who will also be answering any Q&A in the panel session. I was thinking that Vic and I were on the platform about a year ago when the last report was launched. And I remember having a discussion with LaingBuisson in February as to whether the event should be cancelled because we were hearing rumours that some advisors were stopping events due to a flu-type virus which was going through the UK. We went ahead because guidance was unclear and everybody seemed to be doing different things. And I was thinking back to that evening where William did his usual excellent report. We were then enjoyed drinks and canapes with the panelists and a much smaller audience than today, it has to be said. But those times seem a long time ago. None of us could foresee what was about to happen or the changes that would be needed in the care home industry, in the business industry, and in the investment markets. So delighted that William is here today to present the report and put some context around that. William, over to you.
Thank you very much. And thank you for that remembrance of times past. Let's hope that they come back again as soon as possible. So it's certainly been a very challenging year, and I think it's going to be viewed as very much a watershed year. So our challenge was to try to make sense of what's happening to the marketplace, and what I've brought together here in the slides is some highlights from the report. So if we can go on to slide 1. Okay, so what I thought I'd do is just to do 3 slides just to show what's happening in terms of numbers with the coronavirus pandemic, and these are death rates. And what this shows, the dotted line, this is for the entire population, and it just shows that what happened at the start of the outbreak, that we had a massive surge in coronavirus deaths, but also excess deaths, which are indicated by the black dotted line. So there were more people dying than dying from coronavirus, probably due to people not going into hospital, being frightened off, or simply not being given access to hospital if they were in care homes. So a bit of a problematic time. That has changed somewhat since, and we see the later graph going on into the second wave. Let's go on to the second one, which is specifically deaths attributed to coronavirus amongst older care home residents. Now, this data, in fact, comes from CQC and the ONS, and it covers deaths amongst all care home residents wherever they take place, so not just in care homes, but also in hospitals as well. Similar sort of pattern. But I think the most significant thing is the third slide, which shows what the proportion of deaths from coronavirus, what proportion have been amongst residents of care homes for older people. Now, if you see there, this is the dotted blue line, and you see that in the first wave, the proportion, about over half of people who were dying with their deaths attributed to coronavirus, over half of them were actually care home residents. Now, some similar numbers came out of CQC yesterday, and they're very much in line with what I'm presenting here. But you'll notice that as time goes on, this goes down to the sort of mid-20s, and in fact, the very latest figures, which we put in here up to the 8th of January, down to 22%. What this seems to indicate is that all of the draconian measures in visiting and all of the infection control measures that have taken place have been, to some extent anyway, effective, because otherwise you'd have expected the care home deaths to be rising at the same rate as the general population, but they haven't. So that seems to be a positive, but not a total positive. So if you go to the next slide, and which is the impact on volume of demand, occupied beds. So we see the picture that people are quite familiar with. It's interesting, as while talking about this, interesting to note again that the overall demand for care homes for older people has been declining over the last 2.5 decades. The reason for this is because up until 1993, there was access to care homes for people who are publicly funded without any assessment of need at all. That led to a massive increase in demand, and really the shakeout from 1993 till the sort of mid-2000 is what could be expected from that. But what's interesting is that over the past decade or so, care home demand has been flat, despite the rising demand and aging population. But you see here the impact of coronavirus specifically, where we estimate that there were 395,000 older people in care homes in the UK at March 2020, and down to 363,000 by September. And then what we're doing is we're projecting a recovery, but we don't think that recovery, on the best estimate we can make, is going to take place fully until 2023 sometime. And then the question is, what is future demand going to look like? And we've made two projections, basically. One is a very conservative projection, which shows a small increase in demand, and one is another rather less conservative projection, which shows quite a significant increase. I think the important thing here is that there will, we believe anyway, still be some increase in demand for care homes, regardless of the substitutes that exist in the form of housing with care and live-in care. And on the occupancy side, remember that most operators are losers, but some actually are winners, because some are fortunate, of course, to have avoided the coronavirus infection, and so they are absorbing whatever admissions that there are. So let's go on to the next slide, if we could. I mentioned substitutes, and we're very much seeing housing with care as being a substitute for care homes. Now, I know it's not a complete substitute, and the populations do not overlap entirely, but nevertheless, there is some overlap. And I'm not going to suggest that this is a cause and effect, but if you look at what's happened to the trends in care homes for older people, the blue bar, and the orange bar, which is demand for housing with care, number of residents, you see that if you combine the two together more or less track the aging population, what you would expect from the aging population. So I think that is suggestive anyway, that there is a substitution effect going on between housing with care and demand for care homes for older people. But I'll just leave that chart just as an indicator. I don't say there's any necessarily causal relationship. But let's move on to the next slide, if we could. And here we have the fact that the growth, such as it is in care homes, market value, is primarily focused on the self-pay sector. I'm just having a look at this to see if I can't see actually from my slides what the CAGRs are, but I believe from memory that the CAGR over the past 5 years for private pay is about 6%, and for non-private or public pay is about 3%, with the remaining public sector supply declining. So what this represents basically is a fairly static volume of demand, but price increases driven ultimately by costs, and the costs driven largely by national living wage. It'll be different next year, of course, because the national living wage is going to, the rate of increase is going to be much less than it was, it has been in the last few years. But very, very strong private pay continues. Next slide. Group penetration of older care home capacity. There was a lot of talk, going back some time about consolidation within the sector. And it seemed at one stage that there was some sort of industrial logic to larger and larger groups. It all came to a slightly sorry end with the demise of Southern Cross. That's back in 2006. It's a long time ago now. And you can see as a result of that, if you look at the bottom bar, which is the proportion of the market which is held by the 10 largest groups, that in fact was at its peak in 2006 and has declined ever since. So basically there has been deconsolidation at the top end within this market. And I think that in fact does reflect the lack of industrial logic in larger and larger groups. And a lot of the activity, of course, the vibrancy of the market is in the small to mid group range. So let's go on to the next one, if I may. And just looking at here is the profitability of the care home sector. We can only look at profitability from statutory accounts for those who actually provide statutory accounts. So we're talking about groups with revenues of at least £7 million. So what we've focused on here is simply the largest groups to see what the trends are. And this is a very similar story to the past, that those groups which are primarily focused on public pay have seen their profitability, EBITDA's percentage of revenue, on a downward trend. Whereas those who are primarily private pay focused, there has not been the same downward trend, and the absolute value of the absolute profitability is higher. And that again represents the strength of the private pay market. So let's have the next slide. So what I've done in these slides is just to try to indicate some of the highlights that I think came out of the report this year. But of course, there's plenty else within the report. We've maintained the data series that we have always maintained. And just to summarize what the report covers, it's market size and trends, demand and so on, staffing, etc. Government policy and regulation, we still haven't seen any green paper or white paper come out. Payors, that's public pay, private pay, which I've talked about. Market structure, which I've also talked about. Investors I haven't really talked about, and I'm sure others within the panel will talk more about that than me. Certainly, I think the trend now is that an awful lot of the investment into the sector is real estate rather than private equity play. And then the market potential bit, one of the areas we talk about here is digital maturity, digitization, and that's been really being fast forwarded by the coronavirus pandemic. I think that's a very important change that's taking place. So that is my presentation, and let me hand back to Candice.
So let's now move straight on to James Tugendhat, with thanks to William, because there's so much to unpack in what he's just been saying. James, you're a new arrival on the scene, having been appointed as Chief Executive of HC1 last September, following a career 5 years with early years provider Bright Horizons, and previously a career in consumer services and insurance. So be very interested, firstly, to hear about yourself, what brought you into healthcare, how you're finding it, and your aims. Over to you.
Candice, thank you very much, and I hope you can hear me as well. As,
yes.
Like you, I can neither see myself nor hear myself, and I will apologise up front for the joys of home working that we're all managing, and the scaffolders outside, and the the potential interruptions from children struggling to stay focused on their homeschooling. As you say, I've been in the broader care sector for a number of years, and certainly in healthcare for well over 10, but I'm only a few months in now to the aged care sector, and therefore on this call we'll be meeting many new colleagues in the sector, and look forward to meeting many more over the coming months. I was, particularly interested by William's summary, and as always with LaingBuisson, it's a very comprehensive and insightful report. And I think what is no surprise for us at HC1, given that we're one of the larger players, is that we would therefore recognise a lot of the trends. As across the portfolio, we would sort of tend by nature to the average. And so whether in the drop in occupancy or in the changing nature of the sector, I can certainly confirm from an HC1 point of view, the insights of the report. I suppose just one place to start, which William, highlighted the demands and the challenges on colleagues in the sector. And so I wanted to open by highlighting the extraordinary commitment and resilience of our teams, and also the forbearance of our families, who have obviously had to endure far more limited access to their loved ones than they would have wanted. And so, Candice, when you asked me about my early impressions of the sector, they're overwhelmingly about the extraordinary commitment that colleagues have brought, and the forbearance of families. And so I think the exciting thing is that while we're obviously in the midst of the pandemic now, I think we, our investors, can all see the opportunity at the other end, and William highlights it as well, for the sector to grow and to be more. But I think if we're going to really honour the extraordinary commitment of colleagues, and really be there for our families, it will then be incumbent on us to grow back better, and to ensure that as we develop, we are able to offer the care that our families are truly looking for, and to keep building on the remuneration of our colleagues, to work together to ensure that with government we value the role of carers and the skill they bring in a way that is commensurate to the difference that they make. William talked about occupancy and admissions. I mean, certainly I think with a portfolio like ours, you get to see all the variation at work. And what we've seen is that in homes where you've had no outbreaks, in homes that have managed to stay safe all the way through, in geographies where they've been least impacted by tierings or lockdown, you've seen inquiries in some cases grow as a home has become the focus in its community, and you've seen admissions hardly impacted, and therefore occupancy stay very constant. On the other hand, in areas most impacted, longest in tier 4 and then going through lockdown, where you've had more than one outbreak, or the outbreak has been hard to contain and long-standing, admissions have come down well over the average, 40–50% or even more. And so whenever you look at averages, it belies a wide variation in both geography and indeed in just whether how fortunate a home has been, because I believe that however well you manage infection control, as we know, there is just always the risk of transmission. I think the other really interesting point I thought William made was about the growth in residential living or residential with care. And certainly I think for us as HC1, that reinforces part of our focus, which is that there will always be an important role for residential care, for dementia, for nursing, and that residential care, I think, will be incredibly robust over time in catering for those whose dependency means, whose acuity means that really a home with nursing and complex dementia support will be the best place for those individuals. And so while I'm sure other models will grow and domiciliary care has grown, that if we as care home operators are able to meet the need, the more complex needs of our population and keep developing in line with our ability to service increasing dementia, then there's we will continue to play an important role in meeting the needs of society. I think the the last point, just to sort of bring us back, is that however the sector evolves, so much of our success as individual operators, certainly as we see it as HC1, will be on just how good our quality is and how well we meet the needs of our families. And therefore, for us, our focus is simply on building back to truly be the kind care company. Thank you, Candice.
James, thank you very much indeed. And conscious you unfortunately have another commitment, so we only have you for 15 minutes or so, wanted to effectively ask you some of the questions that are already coming through for you and HC1. So picking up on that final point about quality care, how are you finding staffing levels at the moment, and what are vacancy rates like?
So overall, our vacancy rates are very low now, and I think both the increased interest in the care sector, the recognition of its relevance and of its importance as part of the social care, health and social care fabric of our society means that we've seen an uptick in interest, and obviously as other sectors have suffered, I'm sure that's played a part as well. So at the moment, recruiting and attracting colleagues, we've seen a very favourable outlook. Having said that, we have a sort of short-term challenge, which I'm sure our colleagues have in the sector, which is just with the rate of community transmission and invariably, therefore, colleagues quarantining or indeed being ill, we've had a much higher sickness rate. And so at any given point in time, workforce deployment and staffing in any given home is a challenge, but the underlying ability to recruit has been very strong for us.
That's great. And one of the questions in the chat is around what have you faced from a stat perspective in the crisis? Did you notice a bigger number of problems in lockdown 1 than you're now coping with, or is it the other way around?
So lockdown 1, sorry, I'm not quite sure I followed the question, Candice.
The question is actually how many deaths have HC1 faced throughout the crisis, but I was trying to make it slightly more possible than that, positive than that.
Well, again, I think as William's report shows, the death rate in the sort of second wave is much lower than the first wave. I mean, a small fraction of it. And right now, our mortality as a percent of our occupancy is lower at the moment than it was this time last year. And so while we still have a significant number of homes in outbreak, a third of homes at any given time could be in outbreak, outbreak defined as 2 or more residents or colleagues reporting positive. And so while at any point in time an outbreak, the number of homes in outbreak may be quite significant, the number of homes where that outbreak gets beyond 3 colleagues and into the resident population is very limited, thanks to the combined efforts of our teams and infection control testing and everything else we're doing. And therefore the overall mortality rate is right down, even if, we're still facing, in the depths of the crisis at the moment in terms of just the number of homes in outbreak and the number of colleagues testing positive.
Yes, that's great. And another question is, how can care home operators work more closely with hospitals for people being discharged and needing care?
So I think this is one of the big challenges we're all facing, which is the sort of the traditional admissions and assessment processes are all changing, and far more of our enrolment is coming straight from hospitals, with the traditional assessments then delayed. And so I think it puts a big onus, certainly for us, on how well connected we are to the individual social workers, to the individual hospitals, to the discharge units, to the public health authorities in every locality, so that we can make sure that we're able to receive patients that they are looking to discharge once those patients have tested negative.
Yes, thank you. And any comments on vaccinations, both for patients and staff?
I mean, one of the real highlights at the moment in what is a really bleak winter is the vaccination rate. And we are just a smidgen short now of 2/3 of those we care for having been vaccinated, and just a bit short of 40% of our colleagues having been vaccinated. And so it's this odd juxtaposition at the moment of, being in the depths of a bleak winter and yet being able to see spring ahead, and the prospect of homes being one of the safest places to be in the UK.
Yes, absolutely. Right, James, thank you very much. Hope you can stay on the panel for as long as possible.
I can. I'll be there as long as I can, and thank you.
And I think a lot of the themes and questions coming for James also apply to Vic Rayner, our next panelist. Vic, can I ask you to unmute and come and tell us all about the last 12 months? Vic heads up National Care Forum, heavily involved in all aspects of care, and is best person to give us an overview.
Thanks very much, Candice, and delighted to be joining you this morning. So I'm just going to whip through. I think I've got 5 minutes to talk about something that would probably, I could probably talk for 5 months around. So I shall try and be as circumspect as I can. And I too was thinking of the last time we met, Candice, where I do think I did manage to squeeze one slide on COVID into my presentation about the future of social care. And I think that was sometime in late February. So it shows you what a rubbish predictor I am. But thank you for asking me back to talk again about the future. I'll try and be a little more knowledgeable this time round. So if we could move on, Jade, to the first slide. So National Care Forum, leading voice for not-for-profit care providers. We're a membership organisation representing over 130 organisations. Our membership covers older people's care homes, of course, but also a much wider range of provision across the sector. So some of the things I say will relate directly to older people's care homes, and others will have a little bit of stretch across the wider sector. So next slide, please. Okay, so just some points really about what the impact has been on older people's care homes. So as James has very rightly said, right at the centre of all our thinking has got to be the very significant impact COVID has had on residents themselves, and very sadly we have lost large numbers of residents who have died because of COVID, and you know, the long-term sort of very real human tragedy of that, I think, is something that's very difficult for the sector to think about and support. And of course, the impacts are not just on residents, but their relatives and loved ones, and of course the staff who've worked with those people for sometimes many years and have lost them very sadly and often very suddenly. And of course, we're still in this pandemic. Reports last night talking once again about the growing numbers of deaths within care homes. So absolutely, those people, as always, at the heart of everything we think about in care. From a financial perspective, William's given a bit of an overview in relation to some of the kind of cost pressures and profit pressures in relation to care. I suspect when we look at this again this time next year, we'll see some of those spiralling costs that organisations have had to cope with around the supplies very early on, particularly around supplies associated with PPE, staffing costs, managing very significant staff absences at peak times, and of course the actual costs of delivering care to people within those homes increasing as they themselves are experiencing increasing medical and other health requirement supports. Occupancy is very much under pressure. We've seen less occupancy, less admissions from both local authority. Hospital admissions have fallen in some areas, and of course those who are funding themselves have often been looking for alternatives to care home provisions, and so that income, we've got the spiralling costs and the income position of organisations very significantly compromised. The workforce has been absolutely incredible, and I don't think we can thank them enough, and I think we need to think really strategically about how we properly thank them and embed a recognition of the work that they've done when we talk about the future. But they have been under relentless pressure and strain for the last 10 months, unlike their colleagues in the health system, who I'm not suggesting haven't been under pressure, but there has been some easement and shift in that at different points during the pandemic. The pressure for care home staff has continued throughout this and is something we ignore at our peril. James mentioned visiting. It's absolutely critical. It's been one of the really big pressure points for older people's care homes, and is continuing to be some. It's a very public area. The National Care Forum's coordinated quite a lot of work around this, forming coalitions and others to put pressure to ensure that there wasn't a blanket ban approach towards visiting, but visiting remains very challenged, and therefore wider connections with the communities are also under pressure. We started this pandemic with very small amounts of data about what was happening directly within care homes. That has improved very significantly. We have something called Capacity Tracker that now provides lots of real-time data, but of course that has then grown the kind of data burden and data pressure and the number of people who want to know different things about organisations at different points in time. So great that we have more data. We need to make sure we're using it properly. And of course, care homes have been relentlessly in the spotlight for the last 10 months, which has its benefits, but also has been incredibly challenging for those who are running those organisations and working within them, and indeed those who have relatives within those organisations. Next slide, please, Jane. So my final slide, in fact, is just about how do we get out of this? What is our way forward from this, and what are the things that will be absolutely present in all of those who are providing services minds? So from the workforce point of view, we have a very exhausted workforce. It's quite likely at the end of this pandemic that we will see some of the people who have been currently working in care think again about whether they want to continue. Obviously, we've now moved into a position where we have left the European Union, so some of that free movement will also be reduced. So we're going to have to think very differently about how we bring people into the sector and how we meet some of the vacancies that we went into this pandemic with, never mind the ones that might occur as a result of it. We have moved forward very significantly around digital. A lot of that has been driven by the desire to integrate much more closely health and care, whether that's around video consultations or whether that's around sharing of patient records, resident records, but that has been driving the integration agenda and will continue to do so. But we know that there's lots afoot in relation to integrated care systems, etc., and their development. I think we don't know when this pandemic will be over. And I think that makes it really difficult for people to both plan and communicate and think about how they might start to deliver services in a more normal way, or even to identify what normal might look like in a country and a world that is that has been very impacted by the idea of a pandemic, something that many organisations won't have even thought about working with prior to this. William's mentioned the challenges that were already there to the care home model and the development of extra care housing and other housing models. And I suspect that will continue, particularly in terms of some of the research and impact about which homes, what types of homes, what models of homes were more susceptible to COVID than others, if we can begin to disaggregate some of that. The risk management profile has gone through the roof. Everything that every home does has to be risk managed. My worry is that we might roll back some of the more risk taking, the more kind of permissive, person-centered based approaches to risk. So we must make sure that we don't lose some of that, and that people are encouraged to be as independent as possible within all settings. There will be some recovery around occupancy, but we'll need to understand properly what the cost of that and how services might be able to deliver effectively in the future. We've got a lot of challenge going on throughout the pandemic about who knows best, whether local government should be in charge or whether it should be central government. And so I think that's going to continue to play out. And of course, we have the long-awaited promise of reform that keeps appearing in political messages, but doesn't appear in the actuality of what either people are experiencing, or indeed consultation documents or things that we can put our hands on in order to understand how we might reform. But of course, the notion of reform will have to very much be viewed through a lens going forward of how the pandemic has impacted the current provision of social care and the wider community. So some of the options available around insurance and other economic models of funding social care will be severely compromised by the economic austerity that the country will undoubtedly experience as we move out of this pandemic. So there's my cheery overview. I hope it's helpful, and I'd be delighted to discuss and take some comments. Thanks very much.
Thanks very much, Vic. I'd like to move on to introduction of Andrea Auteri now, who is managing partner and co-founder of Elevation Advisors, long-term investors in care. Andrea will be presenting this morning from an investment perspective, and then we will move into a panel discussion. Thanks very much. Keep the questions coming. There's plenty to discuss. Andrea.
Thank you, Candice. So Elevation, just an introduction, business founded three years ago, partner round. We're a specialist healthcare real estate investment manager, investing across the continuum of care, elderly care predominantly, specialist care and mental health. We're currently managing approximately $500 million of assets across 76 care homes and mental health assets. Large focus on the pipeline in terms of developments, very focused on developments for our pipeline, looking to contribute to rejuvenating the stock across the sector. We position ourselves as a one-stop shop for our operating partners. We're currently deploying capital out of our REIT platform for sale-leasebacks and forward leases. We have also the possibility to partner with operators on a joint venture basis for developments on a holdco opportunity, and then we're looking at ground rents, and for selected opportunities we can also consider the credit market through deployment of whole loans for value add and turnaround and development opportunities. And we very much see ourselves as a key stakeholder within the sector, want to have a very positive engagement within the sector as an investor, very responsible kind of investor, and kind of look at our key values of transparency, integrity, alignment, and flexibility as a key conduct of our daily actions and investment principles. If we move on to the next slide, I kind of wanted to reflect on what we've seen in the last 12 months. And I think we, first and foremost, have seen the care sector rise to most extraordinarily challenging situations, very physically and emotionally intense environment, as has been outlined already by Vic and James. And I think we want to express our profound gratitude to all the members of staff who have endured a lot throughout the course of the last 12 months. There's a lot of everyday hero stories that are very much underreported. I think we must do a better job as a sector to bring them to the light, from home managers who have camped out in care homes for 2-3 weeks to avoid bringing the pandemic into the home, to operators who have set up resilience funds for their staff to offer grants, and it is fantastic to see this. As Vic said, I think the members of staff and the colleagues are incredibly hardworking, and it certainly has come through this year, very difficult year for them. When we think about what we see in terms of change, I think we've had seismic change in a very short period of time. That change has highlighted the need for further change. I think when I think about the integration, systems integration between operators and NHS trusts in terms of sharing patient data and availability of bed, which kind of came to bear very early on in the pandemic. That is one example. It highlights kind of how there is a huge opportunity to make radical improvements based on technology, from collection of data in a remote working environment to management and action upon that data that can actually improve clinical outcomes, and allows us to do it from the office. I think when we think about, again, kind of having over 70 homes, just like James said, we have seen a lot of examples. I think the winners in terms of operators have been the ones that have been quickest to react, quickest to change, quickest to adapt, and who have had a very cohesive workforce around them. And as an investor looking at this from with a relative value kind of hat on, I think we have to give it to the sector. It is a needs-based sector, and the characteristics of that needs-based sector have meant that it has demonstrated infrastructure characteristics through government support, government contracts, payment of void beds. We will all say that not enough has been done, but when we think about other sectors in alternative real estate asset classes, I think healthcare has proven to be a beacon of light in terms of the resilience that it has shown. I think investors have very much adopted a proceed with caution type of approach during 2020. Lots of negative headline risks, gap risk, which I would define as not knowing what the pandemic would have caused. Some investors have been sitting on the sideline. We must also not forget that up until the end of December, the country was facing a uncertain Brexit outcome. And I think as we move to the next page, Jay, please, looking at kind of 2021, there are certainly beacons of light, and we are starting to see the light at the end of the tunnel, not only from a macroeconomic perspective, where the central bank flooding the markets really across the board with liquidity is creating a liquidity glut that is going to force investors that have to deploy capital into trying to ascertain which of the various alternative asset classes have proven most resilient and are going to be in the next 12, 18, 24 months going to be the best place to park their investors' money. And I think that combining the light at the end of the tunnel that we are seeing through the vaccinations, the living and the aging themes being key dominant drivers of investor investment strategies, and the excess liquidity that we're seeing across the market, we would expect investor sentiment to be buoyed and much more lively kind of throughout 2021 compared to 2020. Specifically in elderly, I think we are, let's say, comforted by the vaccination program, which has been going at a sustained speed, very kind of mixed numbers across the country, but on balance, it is proceeding steadily. There are, as Vic alluded to, there's an expectation of a new social contract with the government in terms of funding arrangement. So far, it has been a hope. We continue to hope that there will be a restriking of the social contract between operators and the government. I think operators are going to have to do a lot of rebuilding of their occupancy, at the same time comfort their staff, for what has been a very, very hard, emotionally hard year. And on balance, we see the natural real estate stock of the sector to continue to churn. In fact, that churn, if anything, has only accelerated as potentially older homes have proven to be more susceptible to more prone to a risk of infection, and so that kind of progressive new development and retrofitting of the existing asset, we see that continuing and accelerating throughout the course of 2021. And then across the other markets that we're looking at, I think specialty care has been relatively resilient, just given kind of the younger age profile of the residents. And we think, as William alluded to, retirement living, housing with care will continue its growth and appeal to newer demographics that are coming to that age. And I think we're starting to see, whether it's as a result of stagnating sales, we're starting to see operators being much more in tune with offering kind of both for sale and for rental markets or options. And so both markets kind of will sort of likely combine into one. So that's our view. Very happy to take any questions.
That's fantastic, Andrea. Thank you very much indeed. So on to the panel discussion. Lots of questions. Andrea, just picking up on something you actually mentioned. The question is, how supportive have care home REITs been to operator tenants throughout the pandemic? We do a lot of work with REITs, and from what I've seen, that's been 100%, whether it's providing additional funding for operational needs or bringing forward CapEx programs because places are less occupied. Interested in views. James, great to see you still on. James, Andrea, any thoughts on that?
I think it's very hard as a REIT, as you're seeing so much pain and so much effort go on in the homes, and I just wish you could do more, but you're not an operator. Therefore, the only thing you can do is be supportive, share best practices. We tended to facilitate communication amongst our operators, whether it's at the beginning of the pandemic, how to source PPE, and throughout the months, whether it's comfort around what else we are seeing in the sector, perhaps, and sharing best practices, whether it's ways of containing the infection within the homes through additional gadgets or technology, or tools to measure and to help the members of staff as much as possible.
Thanks, James.
I can't comment on REITs in particular, but we've certainly seen a great deal of patience from our investors and just a desire to do the right thing.
Absolutely. William, any views from you on that question and what you're saying?
Well, just that both Impact and Target REITs have reported that the rents are very, very largely being paid on time.
Yeah.
Excellent.
James, sorry.
No, I'm conscious that there's a stream of questions coming through, and I, for one, find it very hard to listen to my fellow panelists and multitask and answer questions. But I did, before I want to just have a go at answering a couple of them, but only when you're ready, Candice.
No, please carry on.
Well, there were some just very good questions about what about colleagues who are declining the vaccine? And I know certain sector colleagues have made statements on this. All I can say at the moment is that we're seeing the decline rate really fall. It's under 5% now. And as more and more residents are vaccinated, I think more and more colleagues are seeing it safe. And as more colleagues get vaccinated, the momentum just rolls. Our approach is to coach and talk to people about duty of care and the fact that for every 20 people that are vaccinated, there's one death less. As we really get through all the populations, then we'll have to consider the decline rate again. But for now, I think it's just about helping people know it's the right thing to do. Other colleagues have been asking about, how we measure outcomes, and we're putting a lot of work into that. And first and foremost is going with our regulatory outcomes. But it's really around how we measure how well we're delivering on the care plan and the care intent of the family, and really trying to get to what the person wants and how we then measure ourselves to meeting that. But we also look at social media as well as regulated outcomes. And then there have been questions on, when is the recovery? And, I think anyone's guess is as good as mine with so many factors at play. But we're certainly hoping that admissions will normalise through the summer, and admission rates, and then you have to catch up for a few months, and then occupancy start pulling back so that we're back at pre-COVID levels, going into 23, 24.
Thank you. Vic, any comments from you on the vaccine issues?
Yeah, I mean, I think James is absolutely right in the approach he's talking about, in that, when we're working with members, it's absolutely about giving people the information that they need in relation to the vaccine, being really clear to staff particularly, but obviously residents and families as well, that no question is wrong to ask. I think people have got there's so much, we're almost we've got a glut of information out there for people, and endless toolkits and endless resources, which is brilliant. But of course, if you're not certain yourself, there are there's lots of conflicting information. So I think it's just giving people permission to ask as much as they want. The challenge I think we've got, and we've been talking with colleagues in the health service around this too, is particularly in care homes where the intention is to try and vaccinate staff and residents together. If you have staff who are either unable to be there or unwilling at that time, it's about making sure they have opportunities to reconsider and think again and do it at another time. And I think that's, we just need to make sure there's not a kind of group of people who are towards the end of that rollout of the care home vaccination weren't sure, weren't able to be around, and then don't get picked up quickly. Because I think it's all about, there's a really there's a reason why both staff and residents are in that priority group 1, and we just need to make sure we do everything possible to get those who are willing to be vaccinated done as quickly as possible, and those who are not sure, given all the opportunities and all the time to talk it through. I think, absolutely encouragement is the right way forward.
I'm actually relieved to hear that, having listened to a media broadcast at the weekend from a major national plumbers, where it was no vaccine, no job. So delighted to hear that the entire care industry is about informing and encouraging. But it's a real challenge, I think, for all businesses, particularly in this area. Some interesting questions coming through on development. Andrea, you mentioned you are funding a lot of development. And the question is there any correlation between care home size and COVID, or care home spec and COVID? James, Andrea, seeing any differences?
Look, I think the correlation has been more with the level of infection within the community. So it's geographically driven. That's a very obvious one. If you have COVID in the communities, no matter whether you have a latest development or an old old converted stock, you will likely get it. I think what we're seeing is, and my comment earlier was more in relation to the ability to withstand the impact of COVID. I think what we're seeing is older homes losing 3, 4, 5 residents might mean losing 20, 30% of the occupancy. And the financial impact is much more significant on a smaller home. Therefore, and I think whether it's marketing perception or actually infection control, you would argue that the ability to bathe a resident in their own bedroom through an ensuite wet room is going to certainly be better as opposed to worse than having a communal shower. So that has got to be true, but it's hard to pinpoint any precise correlation with the physical footprint.
Yes, I mean, I agree with Andrea. I mean, I think he makes a very important point of we have to parse apart correlation and causation. And, once, when you have high transmission in the community, however good your defenses and your infection control, there's just a higher risk of it getting out. When you have a very large number of residents managing very complex dementia, the movement around the home will be very different than in a very residential oriented population. And then when it's a bigger home, if it gets out, there are more people at risk. But we've also seen in many bigger homes it being easier to cohort and separate and manage as well. So I just think there are so many factors, let alone just the rate of testing, that come into play, that predicting correlation and causation is still very difficult. And I think in terms of, just further to Andrea's comment on building, we're certainly seeing more importance around ventilation, air purification, and really, I think, rethinking as well about communal spaces. And recognizing, especially when we are serving communities with dementia, that some of the old traditional thinking about everyone wanted to be in a community space isn't necessarily true, and the importance of the room versus a space where people come together. So I think it's early to assess how this is going to play out, but there are definitely lessons to learn.
Thanks. And Vic, just wanted to pick up with you exactly on the design point, because certainly I've heard some operators thinking about it from a staffing perspective, or having to provide different entrances and exits for staff and residents and visitors, and in and out as well. Any comments?
So I agree with the points made. I mean, there was some of the early research, so the Vivaldi research did try and pick out points around sizes of numbers of residents, but I think, ultimately it is about, and I think that's what I was trying to say in my mini presentation as well, is that I think some of the learning from this, which relates to staffing, as James mentions, the ability to cohort groups of people, the ability to kind of, in essence, whatever the size of the home is, be able to deliver in smaller group settings within it, will probably begin to dominate as we look at sort of building going forward. Many of our members who have adopted a more of a kind of household type model have certainly related that already had pre-established groupings of staff, for example, within certain households, enabled catering facilities to be delivered within household, a much smaller household model, had smaller communal areas, etc. So the ability to sort of have a smaller group of people who could be supported within a larger home environment was very helpful in terms of thinking about IPC controls and thinking about spread. I mean, you're right about the sort of exit and egress type of changes that are part of our current IPC approaches. And interestingly, whilst we had huge amounts of focus early on around PPE, you know, that's really the very first level of defence. Once we start to look higher up the kind of infection chain, it's much more about the flow of people within buildings. So, you know, we are thinking about all those things in different ways, and I suspect that will certainly influence design. I mean, I for one hope that when we start to think about sort of visiting and some of the things that homes have had to go through in order to meet government guidelines around screens and rooms where one person comes in from one side of the building and somebody else comes in from the others, I hope that we're not looking at that as a long-term model for visiting and connection, because it doesn't feel to me that that's anything. It's achieving something within a very challenged context, but it's certainly not something we should be building into our future plans.
Thanks.
So I'm afraid I am going to have to go.
All right, James.
I've stayed on because it's been such a fascinating conversation, and thanks to Vic and Andrea and William, obviously, and to your chairing. And I'll look forward to meeting many more colleagues in the sector over the coming months. Thank
Pleasure.
you.
Okay.
Thank you for having us. William, there are actually a couple of questions on your presentation, which would be interesting if you're able to come in on those. First is, are the stats nationwide, and do they include Northern Ireland?
They are UK-wide. Northern Ireland is a small part of that. 1.5 million people.
Thank you. And I think the other thing, I don't know if you've got any comments on what we've just been discussing, but the other thing that seems to be a lot on the chat is, what is the benefit of domiciliary care? Are you seeing the sort of slight reduction in care home numbers being covered by domiciliary care? Is that short-term COVID related or something for the future?
I think that there is a renewed interest, a lot of interest in live-in care, particularly because that does offer real alternatives. For some people, that can be cost-effective as well. The problem with live-in care is there's a constraint on staffing. It doesn't fit the lifestyle of that many people. So it is a substitute, and it is very useful, and it's for many people, it's a great way of receiving care. But I don't see this taking over any large extent from care homes.
And picking up on that point, Andrea, I mean, I think one of the problems we found with the domiciliary care market is the fact it's not asset backed. Other than small offices, there tends not to be any other property. So for real estate investors who've made such a difference to the care markets, it's more of a challenge to fund. Any views?
I'd point to the slide that William had with the rising kind of housing with care and the substitution. I think that's been going on for quite a while, i.e. over the last 10 to 15 years, we have seen a rise in acuity across the care home sector, which is driven by the fact that domiciliary care has combined with housing with care, and the two kind of usually kind of work hand in hand, has been eating at the more residential part of the market. I don't think that's a new trend. I think that's been going on in the last 10, 15 years. When you look at as the report will highlight, the proportion of revenue from the sector that comes from the NHS has tripled from 3% to about 10% in the space of 10 years. So that tells you that the average acuity of the residents is higher, the average length of stay is lower. So I think it's, I don't see a particularly renewed threat from domiciliary care, primarily because it is, I'd say, impossible to take care of the average care home resident at home in a domiciliary environment, thinking about the physical challenges around the home, but also the prohibitively high costs, especially if you're in an urban environment, of having 24/7 care.
Thanks. William, any comments?
Could I do the classic thing and not to answer that question and to say something entirely different? I think an awful lot of the discussion, quite rightly, has been about coronavirus. It's been about the resilience of staff and how extremely well they've performed. We've had much less about the money side. What I'm very conscious of is that the new financial year starts in April. No one really knows what the additional costs have been. We know roughly what they are, the elements of them, but the whole sector really needs a cost benchmark reset. And I think that is a very important thing to think about, before the new financial year arrives.
Agreed. And Vic?
Yeah, I mean, I agree. I mean, I think there are so many. I think that's part of what I was saying about the kind of, when we now think about reform, we're going to have to think about it in the context of, what needs to be funded in order for safe care to be continued to be delivered going forward. And a lot of the costs that we've seen in this year will absolutely continue into next year. We know that there's some relief in relation to PPE up until the end of June, so some of those costs will be covered by the government, but all of the other mechanisms that have been brought in to provide additional funding, such as the Infection Control Fund, the new staffing fund, the new testing funding that's there, there's no commitment for any of those to be extended beyond, but those costs won't disappear magically on the 31st of March. So I think, and we're starting to hear now from members who are getting, those who are delivering publicly funded care, that they're getting the letters from local authorities about potential fees for the coming year, and letters explaining in great detail about the rising costs that organisations will face around staffing and working in a COVID environment, and then offering at the end of it an 0% uplift. So that there is a complete gap between the actual realities of the costs that are currently being experienced, I would say, by organisations and will be experienced in the future, and what is being offered from the public purse. And the worry is, of course, that then gets translated into a very significant push onto self-funders who I don't think should be being asked to pay the full costs of the COVID crisis through an increase in their fees.
That's absolutely right, when they're already subsidising the public purse by about 40%, I think, according to William's slides. We've got 5 minutes, could chat all morning, but the final question, consistent theme, is digitisation, and how can digitisation improve outcomes, operational efficiency, and better joined up healthcare? Any comments? William, will we kick off with you?
Yes, well, what we know is that the digital maturity of the care home sector is still fairly low. Supposedly only about a third are fully digitally mature in any way. The issue, I think, is that although there are benefits from digitalization, which benefits in efficiency to the provider, also in terms of what can be offered in the way of information to the service users and their families, that really there is not an absolute cast iron case for investment in digital from providers, and what it needs is investment from the NHS, which is going to really be the beneficiary of better connectivity between social care and healthcare. I understand that the NHS England and NHSX is fully aware of this, and there are moves afoot, and the funding is likely to come. And I think this, next year is going to be really important.
Andrea, any views on that?
Yeah, I think there's a tremendous opportunity at the operational level to really capture a lot more data, whether it's clinical data, whether it's health and safety data, whether it is financial data. And I think that is already being done in the US. So there's a great kind of learning map that we have in front of us, and clearly a lot more to be done on this front. And from a real estate perspective, I think thinking about kind of environmental credentials of buildings, there's clearly further opportunities that one could do across developments to measure, record, and try and reduce kind of the emissions and kind of the energy intensity of the buildings that we have.
Yeah, I agree with that. I think the net zero carbon initiative, which the NHS is now implementing, will be a very important part, as there's such a big landowner in the UK. Vic, any views on digitisation?
Yeah, I mean, a bit of optimism, I guess, in a sea of not so optimistic comments, but I think the digital side of things one of the things that COVID has done has brought the digital to the fore, and I think William's right. A lot of the benefits and a lot of the push have come from the NHS, a desire to get much more effective integrated records between health and care as part of that. We've seen some significant digital initiatives, including the rollout of 11,000 iPads to care homes during the pandemic to support greater access to video consultation, greater access to NHS mail, secure mail, big focus around cybersecurity and improving the information governance and cybersecurity understanding within care organisations much more broadly than care homes. And we've got something called the Joining Up Care Initiative, which is funded by NHSX and looking to bring together health and care more closely. And I think you're right, William, NHSX particularly has got a very clear understanding that you can't actually enhance the digital progress of the NHS without recognising the need to bring care with it. I guess my ambition is that some of that energy goes into really understanding what are the important innovations and things for care in its own right, rather than being dragged forward by an NHS agenda. So, our work is very much influencing, trying to understand, what people who receive care will benefit most from in the context of digital, and always thinking about how it can be really used to enable much greater independence for people. Everybody else seemingly has benefited from kind of digital transformation in many ways across their lives, but the people who are on the receiving end of care, I suspect, don't feel that things have changed as dramatically as they have in other parts of life. And I think over the next 2 to 3 years, we'll be pushing very hard to see that happen for them, and to absolutely talk to those agendas about productivity and efficiency as well, because we're a sector that definitely needs to work smarter in order to continue to move forward.
Thank you. I think that's an excellent note to conclude on. And it's been a very interesting discussion. Hope you've all found it so and had your questions answered. It's a positive note to end on for 2021, I believe. We have a resilient market. Capital is there, whether that's enhanced government funding, central government funding at least, even if it hasn't yet got through to the local authorities, and from investors like Elevation and others globally. It's been a challenge to integrate, as we've just covered in that last question. But as Vic says, the organisations need to operate more smartly, more efficiently. Digital flow needs to be enhanced, and I think everybody's very aware of that and working hard on that. We've seen innovative ideas coming through development programmes around the way for development of care homes for the future. And most importantly, today's been about a tribute to the staff throughout our organisations who continue to work tirelessly for the benefit of residents. Thank you very much, and do buy LaingBuisson's 31st Care Home Markets for Older People market report.
Thank you.